All right. Today's Tuesday, the 26th of November. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. You know what? This is really a good one. It's one of those shows that I look at as I'm doing it, as I'm preparing the show. And I'd say this is a good one for real. I'm not bullshitting you. We're going to talk about a lot of things here, folks. Macro, the trade war, AMGN, DELL, everything. Let's begin right away from the macro data that we got today. And it's a hint, no surprise, of course, not good. Here's the headline for you. U.S. new home sales change month-on-month actual, down 17.3%. What was the forecast? Down 1.8%. The previous reading was 4.1% positive. So this is a disaster for the housing market, and it's a pulse that the consumer is getting much, much weaker by the day. And it's also an indicator that prices are wacky right now, but prices been wacky for a while. Yet we've seen new home sales moving positive from time to time. This kind of crash in the pace of new home sales indicates that the consumer is getting weaker. To combat inflation for about 2 years, they've been exhausting their savings. What was meant to buy a home? They've racked up a lot of credit card debt, and now the savings go to pay for the credit cards, for the loans, for inflation, and not for the home. And check out this. The total unsold new homes for sale right now at the highest level since 2007. Gee, what happened back then? I can't remember. I think it was good times, right? Everything boomed higher and we got a soft landing, right? Prices are too high, says Don Johnson. Yeah, prices are too high. So what is the natural resolution? Prices gotta go down. Prices are not gonna go down until we have a recession. Recession not gonna happen until the stock market crashes to impact the wealth effect negatively. But if we stay in this kind of scenario where the Fed and the administration and the Treasury continue to manipulate stocks higher, then the wealth impact will keep this stagflationary environment in the housing market alive. Today we got the Case-Shiller Home Price Index. It was down a tick, but not by much. It is reflecting the stall that we've been seeing recently. Prices been ticking higher, tick. Now it ticked down a little bit because there are folks who have their homes for sale. At some point, they gotta capitulate. Some folks have certain priorities. Grandma going to a nursing home or whatever, and you need the money right away. Of course, you gotta drop the price a little bit so it can sell right now. But the majority of the drop, aka the crash in the housing market, will happen because of this insane price versus demand dynamic, which doesn't make sense at all. But it needs a trigger for those folks who want to sell their homes right now to be scared that, wait a minute, the economy is now getting weaker. I gotta drop the price, the asking price on the home. But whoops, my neighbor, better home, is dropping the price more than I did. So now it becomes a race to the bottom. But what is the trigger? Once again, you gotta see the unemployment rate going higher. That's not gonna happen without the stock market crashing. So I said this before, Mr. Powell, you will never defeat inflation without crashing the stock market. All of this talk about the soft landing and, we're going to defeat inflation and keep stock prices elevated at the most overpriced and overvalued in history. That's lunacy. And that's never going to happen. Either you keep stock prices higher and re-inflate the bubble and have reinflation in the economy, which, by the way, certain segments of the economy will continue to get weaker with higher inflation. So you'll end up in a brutal stagflation in the economy, or accept the reality. Drop the stock market down, drop the wealth effect, get a recession going on, the sooner the better. Prices go down, and then the economy recovers as it did before naturally. But the more this soft landing game goes on, the bigger the disaster. Remember what I said, because someday, really soon, we're not talking 10 years from now, someday really soon, could be as soon as next year, everybody will be revisiting what I just said right here. Anyhow, when we talk about the housing market, I mean, look at this. All recent home sales data revised lower. Donald Trump has no idea of the epic rug pull that is coming. Indeed, he's going to be the nail in the coffin. I said that before, because you might look at all of this right now and say to yourself, but Mav, housing prices will go down. I mean, even if there's no stock market crash, folks will capitulate and begin to drop prices down. And that's going to be good for inflation, no? Meaning inflation goes down. Hold your horses, because you have this dynamic where we have a stag happening in the housing market. Inflation is about to come back with ferocity. And the reason is the trade war. I mean, listen to the Fed. The Fed is beginning to shit their pants. The Fed came out today with the minutes. They say, yeah, we're going to cut rates, but we're going to do it gradually. Well, wait a minute. I thought that inflation is on track for 2%. And it's been defeated and a soft landing has been achieved. Cut rates as aggressive as you can right now. They would not do it because they know inflation has not been defeated yet. And they know that the policies of the new administration will be disastrous in bringing back inflation. So when the Fed minutes say that we're going to cut rates with gradual progress or gradual pace, I say you're not going to cut shit, because soon enough, we'll begin to see inflation metrics moving higher again. And that's going to be the nail in the coffin for everything. The economy, the Fed, all of this talk about the soft landing. You'll see a different stock market next year when these dynamics begin to play out. What is the problem with the tariffs? And by the way, before we begin talking about the tariffs, understand that if you go back to my videos, the old timers here remember all of that. I'm not a fan of NAFTA, and I think that tariffs are warranted in certain scenarios because we've been robbed for a long time. But the reality is that tariffs cause higher inflation. There's no doubt about it. So listen to the headline right here. Trump proposed tariffs increases would boost inflation by nearly 1%, according to Goldman Sachs. When Goldman says 1%, make that 5%. On Monday, Trump said on social media site Truth Social that he would impose additional 10% tariffs on goods from China. We already have tariffs on goods from China, so that's an additional 10% and a 25% levy for Canada and Mexico. The three countries in question account for 43% of U.S. goods imports, and the tariffs would result in slightly less than $300 billion in revenue annually. It remains to be seen whether tariffs will actually be implemented at the levels Trump proposed or what expectations might be made. Again, they want to play this game. Oh, he's just bluffing. He's playing a game because they're afraid of upsetting the stock market. Well, understand this. He did it before. He'll do it again. He's been talking about it for over 30 years. There's absolutely no way to change his mind about it. And the target this time around is going to be Mexico more than it is China. So this could get really, really, really ugly because we're now more reliant on Mexico than ever before. And oh, by the way, the Mexican president came out today. I mean, she's playing the carrot and the stick. She says we're going to stop the illegal immigration that's been going on in the border. Oh, all of a sudden you can't stop it? I thought that was not a possibility. All of a sudden it is a possibility. Okay, maybe Mexico's giving the carrot here that, hey, take it easy on us and we'll do something about immigration. But the stick here from the Mexican president, she says that she would impose its own tariffs to retaliate against any Trump tariffs. The Chinese said the same thing. The Canadians are a little worried, of course, but they would do the same thing too. This trade war will get absolutely ugly and prices will go higher across the board. We'll talk about that in a minute, but who has the advantage in this relationship? Of course, the United States has the advantage because 27% of Mexico's economy is exports to the U.S. 21% of Canada's economy is exports to the U.S. So if this trade war gets ugly, the economies of Mexico and Canada will get absolutely wrecked. That's number one, but so will our economy in the form of inflation because they have to retaliate. 40% of goods come from Mexico, Canada, China, in the United States. And by the way, we're not even talking about the EU. That's another big one. And we have more tariffs coming on the EU. We know Trump doesn't like, out of all these countries here, maybe Canada is the most hated because of Trudeau, because he's such a repulsive character. But he plays games with Mexico. I love Mexico and all that. And China, I love Xi Jinping. He's his best friend and all of that. But he despises the EU for some reason. And I think he's going to devastate the European Union with huge tariffs. So now we're talking about over 60% of the goods that come into the United States will be tariffed. Think about that. Now, why do we say that Mexico will be more impacted or Mexico will be the problem this time around versus China? Since the first trade war in the first-term presidency of Donald Trump, you can see that once the tariffs were introduced, imports from China plummeted. Who took over? Two countries, Mexico and Vietnam. But recently it's been mostly Mexico. And there is a reason behind that because the Chinese are using Mexico as a proxy to move their goods into the United States. And of course, that's going to be a big problem. But look at this. China's share of U.S. import by category. In gray, you got 2017. In red, you got 2023. You see that the share of goods coming from China plummeted across all categories. Vehicle parts, laptops, light fixtures, smartphones, semiconductors, big time. But more goods are now being imported from Mexico. You see 2017 in gray and then in yellow or gold or whatever the hell that is in 23. You can see the vehicles, Much more from Mexico, vehicle parts, trucks, laptop, tablets, oil, wiring, everything's going higher. So Mexico will be on the crosshairs here in the new trade war. But so is Vietnam, to be honest with you, because you can see here kitchen cabinets, the value of U.S. imports of kitchen cabinets. Before the trade war was mostly from China. After the trade war, China lost market share, but Vietnam gained. It doesn't matter at the end of the day. You solve the problem with China. Now you got a trade deficit with Vietnam. You hit Vietnam, the producers, the manufacturers will switch to India. You hit India, they're going to switch to Cambodia. I mean, that's the nature of business at the end of the day. The producers will look for the cheapest input price that they can possibly find. And that's going to cause a trade deficit. You can see it here in total imports. Okay, not just the kitchen cabinets. You can see the biggest share. South Korea went higher. That's semiconductors mostly, but Vietnam took the lion's share. And then you got Taiwan, Thailand, India, Ireland, all of them gaining because China lost. But the best gainer is Vietnam. And I wish, by the way, since we're benefiting Vietnam so much and we're exploding their economy in a boom and all of that, can we pretty please ask them to stop killing and butchering rhinos just to get their horns, to get their dicks bigger? Because that's not going to work out. I think if I'm advising Trump, I would say that's the number one thing you should ask Vietnam to do. Stop eating rhinos. Otherwise, we'll slap in 50% tariffs on you. And for the love of God, why don't you use just Viagra? Does the job. Hims.com, right? Anyways, here's from the journal, just so you can understand the impact of the tariffs on the economy precisely. How tariffs affect consumer prices could vary, economists say. On the one hand, both U.S. businesses and the importers they purchase from might absorb some tariff costs. We know that's lunacy. They're going to pass all of that extra cost down to us. If they can, they'll do it. And they said that openly. Anyhow, on the other hand, there could be a ripple effect as competing suppliers outside of Canada, Mexico, China take advantage of the opportunity to raise prices. Bingo. The Peterson Institute of International Economics, a think tank in Washington, D.C., estimates that under Trump, new possible tariffs prices would rise by 1%, same as what Goldman Sachs calculated. It additionally estimates that by 2026, GDP would be 0.6% lower than it otherwise would have been, and the total U.S. employment would be 1% lower. Ta-da, there we go. Add the stagflation, we're probably going to be 5% lower. But anyways, listen to this. Border communities like Laredo, Texas, could see the unemployment rate soar to double digits, says Marcus Nolan, a senior fellow at the Peterson Institute. By the way, Jerome Powell admitted that part of the reason why we're not seeing the unemployment rate moving higher and why we've at least gained some control over inflation is illegal immigration, because we're getting slave labor for slave wages and we're just moving the economy that way. And when the recession happens, all of these people will be out of jobs. They're going to have to commit crimes, right? But we have a president here who's going to probably, at least he says, initiate a massive deportation campaign. And what do you think that's going to do to inflation? The opposite effect. Anyways, that's where the trucks cross the border, talking about all these border towns. If the jobs are to intermediate trade and there is no trade, they're going to be out of work, he said. Employment in agriculture would be hard hit too, according to the analysis, coming in 3.1% below where it would have been otherwise. Anyways, employment in durable manufacturing, the building of cars and other long-lasting goods would be 5.4% lower. Here comes Canada. Automakers in particular might be at risk. They have become reliant on a network of factories and parts suppliers that span the U.S., Mexico, and Canada since North America Free Trade Agreement came into effect 30 years ago, followed by its successor, the U.S.-Mexico-Canada Agreement. Tariffs on 25% of imports from Mexico and Canada could add $3,000. Listen to this, $3,000 on average to the price of a car. This is according to Wolf Research. The firm estimates that about $97 billion worth of auto parts are imported to the U.S. from the two countries each year, and 4 million vehicles are shipped in, about 3 million from Mexico, 1 million from Canada. And you saw the wreckage that we've seen today in auto parts, stocks, in GM down to almost 10% in a single day. This is serious, and these tariffs are going to cause havoc to this economy. I know the market is ignoring it right now because of the holidays and all of that, but this is going to become front and center sooner than later. Wait till we introduce the European Union to the Canada, China, Mexico dynamic. I think the market is going to shit its pants. I mean, look at the semiconductors just as an example. The weakness is evident. Anyhow, added costs from the potential levies also would hammer the bottom lines of GM, Ford Motor, and Jeep maker Stellantis, all of them down big today, which all produce vehicles south of the border and rely on parts shipments from there. Evercore ISI estimates a 50% reduction in earnings per share for GM and Stellantis, and 25% for Ford. Shares of all three companies fell on Tuesday, with GM stock shedding about 9%. The National Retail Federation said that the timing of the proposed tariffs in Jan would have an oversized impact on fresh fruits and vegetables, of which the U.S. sources less at that time. U.S. importers will pay 25% more on the $10 billion worth of Mexican avocados, tomatoes, raspberries, strawberries, and peppers alone. A 25% tax on the $10 billion worth of Mexican beer, tequila, mezcal imports, said David French, the senior president of government relations at the industry group. Enjoy this last Thanksgiving meal, because it's going to be the cheapest you're ever going to see food. From this point on, everything is going higher. I know avocados, that's going to become a luxury. I mean, it's already expensive as it is right now. And that means at least 25% of the youth population in California would die. So think about that. It's going to increase the unemployment rate significantly higher. And again, right now, on the crosshair is Mexico. But I think this guy has something against Canada. He just doesn't like Trudeau. And again, the guy is repulsive, so I understand why, but he just hates that guy. And he wants to hit him really, really hard. He despises Europeans too. He wants to hit them really, really hard. So hold your horses, buckle up your seatbelts, and grab your popcorn. Can we make that into a shirt? Maybe the Maverick store should be out since Christmas is coming out. But anyways, let's talk about AMGN, because a lot of the questions today were about AMGN. Hey, Mav, you said buy AMGN. AMGN crashed. What's going on? Let's go back to what I said precisely during the live stream about AMGN and then come back. What do you think of AMGN December 6th, 300 calls? If we go with 300. 300 is going to require, let's see here. 300 is going to require a move of about 5% by December. Possible, yes, for a name that is oversold. But again, what is the risk versus reward? So if we look at AMGN, go December, 300 calls. The break even is 900 and we're spending 1,200. Why is that? That's just too much. Yeah, that's way too much. 300 calls for 1,200, that doesn't make sense at all. It makes sense to buy the stock, to be honest, and to sell these calls. Right? It makes sense to sell the calls. I don't know why the market maker is pricing in higher volatility in AMGN. Earnings? No. This is really interesting. I honestly, just buy the stock and sell the covered calls. You don't need to overpay. Like, you'll be the sucker if you buy the calls at these prices, because somebody's buying the shares and you're selling you these calls. I would not do it. I'll buy the shares. Yeah, I'll buy the shares and sell the 300, even the 320. Go to Jan. You're getting $700. Think about it. Buy the shares, sell the covered calls. And then we announced the idea. AMGN call options are really ridiculously priced, overpriced, and now we know the reason. There was an announcement and the market maker was pricing that in case AMGN rockets higher. So I said the opportunity here, you buy 100 shares of AMGN, you sell the 300 calls, that's back on October 20th, or November 20th, I'm sorry. You sell the 300 calls with the expiration date in December for $12.50. We actually got it for 300. Okay, a lot of you got it for 300. Me included. And gee, what do you know? Today we wake up and we see AMGN down 13%. Why? Here it is. AMGN says its Ozempic competitor helped patients lose 20% of their weight. Wall Street is not impressed. In a nutshell, the dummy analysts were predicting 20 to 25%. As if this is revenue or profit or some financial metric. Are these doctors, or are they just bullshitters? They don't even know the stock market, let alone to know the medical stuff. Anybody wants to lose 25% of their body weight in less than a year? You're probably going to get sick. 20% is pretty good. It's more than enough. And it's better than Ozempic and Mounjaro, by the way, but one step at a time. AMGN reported today that the highly anticipated results of the mid-stage trial of its experimental weight loss drug and a potential Ozempic competitor, MariTide. However, Wall Street was not very impressed. The pharma giant said its weight loss medication helped patients living with obesity or those who are overweight lose an average of 20% of their weight in 52-week trial. You really want to lose more than that in 52 weeks? Anyways, for comparison, a clinical trial of Novo Nordisk, blockbuster weight loss Wegovy, found that participants lost an average of 15% of their weight after 68 weeks of the drug. Wait a minute here. The drug by Amgen is much, much better then. Continuing, Brander previously told investors that Ameritrade expect to be sold in a convenient, handheld, pen-friendly auto-injector device with a monthly or even less frequent single-injection administration. Reminder, Wegovy, Ozempic, Mounjaro, once a week, 4 times a month. This guy, 1 injection per month, perhaps 1 every 3 months, and you're done. How's that bad? The company's already planning a larger phase 3 trial for the drug. Still, the trial result came in at the lower end of Wall Street's expectations. Weight loss of 20% meets the bar, but there's a catch, wrote Wells Fargo Securities, who gives a shit. Investors were looking for a minimum of 20% weight loss at the highest dose since Zepbound crosses this bar, and also the newer injectable treatments such as Cagrizima and Trudeau are expected to be at 25% or higher weight loss. The catch? They blow up your colon. Jefferies analyst Michael Yee wrote today in a note that the market overreacted, bingo, and expects Amgen stock to rebound, even if not immediately, once Wall Street digests the result. Maybe they need some to lay off of some of that Mounjaro and Ozempic so you can digest a little better. He added that the data suggests that the Maritide could lead to more weight loss beyond 52 weeks, and that less frequent dosing, whether monthly or quarterly, could make it a competitive option. Similarly, Goldman Sachs analyst Richter wrote that he continues to see a highly differentiated asset and remains confident in the outlook for Maritide as it advances to the late-stage trial. Think about it this way, and I said this on Discord, by the way. Folks were freaking out. Oh my God, Maverick Amgen is crashing. What do we do? Eli Lilly and Novo Nordisk only have market share to lose by the introduction of new competitor. Amgen has only market share to gain. How's that a bad thing? Here's from the New York Times, just so you can see for yourself and hear for yourself the superiority of this drug over Mounjaro. The Amgen drug differs in how it works from obesity drugs that are currently being sold, Wegovy by Novo and Zepbound by Eli Lilly. Those are GLP-1s, which means they bind to a protein on the surface of the cells that respond to the gut hormone GLP-1 and thus make you feel less hungry, make you feel full. But Maritide is an antibody, a type of drug that is long-lasting in the body. Sticking out from the antibody are 2 peptides that also bind to GLP-1 receptors. The antibody itself blocks the effect of another gut hormone known as GIP. That's the hunger hormone. See, what I'm going through right now is I used a lot of Ozempic, and I lost a lot of weight, more than I need, really, which is making me really pissed off. And that's why I'm taking a something that actually stimulates GIP to balance that out. And once I get to the ideal weight, you probably want to get off these drugs or maybe use the new Amgen drug as maintenance just to keep that weight steady. Anyways, Dr. Brander said that the company decided to block. I wish that they give us who the hell is Dr. Brander when they write this shit. But anyways, said that the company decided to block GIP because it had genetic data from Iceland indicating that people who had a variant that stops GIP from working are naturally thinner. And the Icelanders, they're all thin. I haven't seen a fat person from Iceland before. They all naturally have this variant that stops GIP. But folks, if all of this information did not impress you about the new drug by Amgen and didn't clarify the superiority that this drug has over Zepbound, Eli Lilly, Mounjaro, or Novo's, Ozempic, all of them, maybe this is a reason for you to buy. You got your boy Jim Cramer, who came out today and said, as someone who knows how the FDA works on new drugs, this Amgen drug is not competitive with Eli Lilly. What are you, a doctor here? I don't know. Anyways. And you must understand that the incumbent has a huge edge. That was the buying signal right there. And see in Discord, 7:50 a.m., right before, or excuse me, after the open by a little bit. People are panicking. Anybody else were getting wrecked by Amgen this morning, said Squid Kid. And I said, look, Eli Lilly has market share to lose by a new competitor getting in. Amgen has only market share to gain. It is a stupid reaction just because the drug gives you 20% body weight loss while the analysts were expecting 25. This is body loss, not revenue or profit. Losing 20% of body weight in a short period of time is impressive enough, and probably not healthy. The analysts are not medical experts. I am buying the dip big time. And guess what happened? Since that discussion in Discord, AMGN rocketed higher by over 8%. Thank you, Cramer, and thank you to logic. When you actually use your head, not your ass. So a lot of folks are panicking in the morning. Check out what happened here. Just to illustrate for you that panicking was the dumbest decision. You should have bought this dip hand over fist. But anyways, even if you did not, let's go back to the original idea. Bought 100 shares at 286. And by the way, I've been a shareholder of AMGN for way before. I bought it a long time ago, so I'm just adding to my shares here. But hypothetically, assume that I just began the position right here. I bought 100 shares at 286. That was the price when we announced it. That means that we spent about $28,600 to buy 100 shares. Then I said sell the 300 for December. 300 calls is covered calls. That's going to net you $1,300. Okay, what is the entry cost now? $28,600 minus $1,300, that's $27,300. The stock closed at 280 today after the rebound, which means that the value of the 100 shares is $28,000. That means that if you haven't done anything today, you're still up $700 on the idea. If you listened to me and did what I did, averaged down at $260 per share, then the break-even price, because we bought 100 shares again, equivalent to what we bought at 286, so 286 plus 260 by 2, the average break-even price is 273. Now the gain, 200 shares, take the closing price, 280, minus the break-even, you have a gain of $1,400. Now add the covered call, which will expire worthless that we sold for $1,300. You netted a gain on the investment today of $2,700. Enough said. And oh, by the way, some of Jim Cramer calls, he said, all I can tell you is don't Bitcoin. She's a winner. Yeah, and Bitcoin went down right away. So rest in peace to all of the Bitcoiners. It's time to sell, okay? Just be careful here. But on the bright side, Jim Cramer came out yesterday and he warned of market excess froth as stocks surge, which means there is no correction. Higher we go until Jim Cramer makes the call that we're hitting higher. Lastly, in this segment of this video, let's talk about DELL because we also have a position in DELL. DELL came out with the report. Here's the headline for you. DELL reported worse than expected sales after a budding revival in the personal computer market stalled out. Shares of DELL were down about 1.5% today. Last time I checked, the reaction is shares of DELL down 10.65%. So a huge drop after the bell. Why is that happening? It's the same problem that we see with NVIDIA. The growth stalled. You're running against the law of large numbers. That's it. You see the growth in Q2 24 peaked at 38% for the ISG revenue segment. This is the data centers, what's really important from the AI mania. Well, growth slowed down to 34% in the latest report. Not bad, but we've peaked. We can't really beat the law of large numbers. And again, 34% year-on-year growth. The stock in the same period is up about 87%. That doesn't make any sense. The stock should be priced correctly and price in the actual growth that happened and be trading at around 100 to 110, nothing more. It's a case of overvaluation. And I had a short on it. I showed a DELL a few weeks ago. Problem is, out of all of the short ideas I shared with you guys, this is the one that you guys followed. At least this is the impression that I get. What do we do with DELL, Mav? You said short, now it goes higher. What do we do? So I said, you know what? Since a lot of folks followed, I got to be careful here, lead by example. But if this was my trade and nobody followed it, I'd just keep it as it is because I have a fundamental thesis that I'm confident in. But because a lot of folks followed it, so I said yesterday, I closed my short and entered this trade instead yesterday to still have skin in the game if it drops, but limit the loss if it rockets higher. Because there was a risk also. If it had rocketed higher because the problem was Supermicro, rerouting some orders to DELL, that was a possibility. And had that been the scenario, and DELL is up 10%, the short would have triggered a margin call. So again, it was the right decision either way. But we still got participation because we bought the 130 calendar put spread, bought next week, sold this week. And we also bought the 120 for the expiration date of this week. How do we manage this trade right now? Scenario number one. Let's say that DELL begins to recover tomorrow. You see it dipping, and then we see a little bit of buying. You want to close the 120 right away, but there is risk, by the way, in closing the 120. Because if it closes below 130, then if you want to keep the trade on short of 130, you got to buy the leg that we sold for this week. But this is what I'm going to do. If I see the dip being bought, let's say that we close closer to 130, maybe a touch above, touch below. The 130 expiring this week will expire worthless. And then next week, let's say DELL heads down and now the 130 is in the money. We exercise and we short at 130. Suppose that we open, scenario number two. We open and DELL begins to sell like crazy. and now it's going below 120 and all of that. At that point, then I'll be closing the 130 calendar puts and exercise the 120 to short at 120. What happens if we get stuck between 125, 124? In that scenario, maybe, depending on how much the 120 will be worth tomorrow, you sell the 120, use the proceeds to buy the 130 expiring this week that we sold, and then leave the 130 for next week to be exercised. In that way, we short DELL at 130. So again, I'll update you with all of that tomorrow. But this is the idea, and the thesis was validated. Even though the stock was going higher, everybody was freaking out. Like nothing changed. Fundamentals, looked at it. I think they're peaking. I think they go down. Michael Dell is not selling billions of dollars worth of shares because he thinks growth is going higher. Anyways, let's add more conversation. Let's add more color to this conversation, folks, by revisiting the market activities today, beginning with the closing of the indices. And here we go. The diamonds making a comeback, although they were the loser in the morning because of the trade war. But we talked about this in the morning brief video, by the way. We got no video last night, but we got a morning brief, which I would say about 2/3 of you did not watch it. But we talked about this: the tariff fears versus the holidays optimism. And the Dow, the action that you see, tariff fears in the morning, gapping down, trading negative. Then came the holidays optimism, moving it all the way to close positive by 123.74 points, or a gain of 0.28%. The Nasdaq leading the way with gains worth 119.46 points, or a gain of 0.63%. And the S&P also positive by 34.26%, or a gain of 0.57%. The Russell 2000 in the red. It was the winner yesterday, but today we got some context on why yields are going down with the disastrous report from new home sales. So we see the Russell down by 1.78 points, or a loss of 0.73%. Since rates are going down for the wrong reasons, good reasons, doesn't matter. Dividend paying stocks benefit. So we see utilities at number 1, followed by defensives and healthcare. Comp services at number 2 for a reason, because Meta and Google moved higher. Technology because of Microsoft. So today the thinking was, look, the tariffs will probably be bad for semiconductors. So take money out of semiconductors and rotate to software that has no attachment to China at all. We're talking about Microsoft, we're talking about Meta, we're talking about Google. Those three are immune. Amazon maybe to a certain extent, but Amazon gets bought before Black Friday, then it's sold next week after the data comes out. And despite the dollar going down today, metals and energy were the worst of the sectors of the day, and the reason is the tariff wars and fears. That's going to impact the chemicals, that's going to impact the fertilizers, that's going to impact copper, that's going to impact the miners, that's going to impact steel. So unfortunately, metals get hit, even though the dollar is down. So I think the safest metal right now remains gold, maybe silver. But gold has that resiliency that if the dollar goes down, that's all what gold needs. It's not really involved in the trade war. And energy, of course, went down because of the news of the ceasefire in Lebanon. We'll look at the breadth. It was actually positive. NYSE 71% advancing, 28% declining. The Nasdaq 64% advancing, 33% declining. And we see way more 52-week highs versus lows. So the breadth was pretty good across the board. But then you look at the map and you see there are casualties here. Let's begin with technology. The obvious ones, the chips, excluding NVIDIA. Maybe NVIDIA is just being bought before the holiday or whatever, but Taiwan, AMD, Intel, ARM, all of them going down. So ASML, AMAD, Lam, all of them down because of fears of these tariffs. And the money's rotating to Microsoft, which has no attachment to the tariffs. Apple, it's just going higher by manipulation, although it should be down because of these trade fears. And the same goes with Tesla, by the way. But these two are being manipulated via options. You look at the other big caps, Google, Meta, Amazon, going higher because the exposure to China is limited. That's one dynamic that you see in the market. And of course, the trade war we're talking about. The trade war, you see it in metals. A lot of metals are down today. You see it in energy. Energy is down today. You see it in some of these cyclicals like Nike, like Starbucks. And when we talk about Canada, the auto part manufacturers, the autos, GM, Ford, all of them getting hammered today. And even in the industrials, you see some of that impact. A lot of industrials with exposure to China were down. The other dynamic, of course, what we've seen today, AMGN down, Eli Lilly higher. I think that's wrongful. But the third dynamic is the fact that yields went down, but for the wrong reasons. So you see financials down. Remember, financials were going higher along with the yields going higher. Now yields go down, financials go down. What's benefiting from yields going down for the wrong reasons? The defensive stuff. Utilities, real estate, staples, Walmart, Procter & Gamble, Philip Morris, all of them moving higher. So this is the dynamic for today. It was a really interesting session, even though it's a holiday trading week. You look at the ETFs. Once again, TLT down, yields up. But again, yields were down yesterday. we added context to why that happened. So that's not good for the risk-on IWM or the KRE or the XRT retail or the XHB home builders. The XBI is the exception because we got some shuffling because of this news from AMGN. So XBI caught some ground today. The defensive, XLU leading, XLP positive, IYR real estate positive, XLV, yield sensitive, risk off also positive. And this is why I say when you see yields down, you're better off sticking with the defensive stuff because the risk on stuff like the IWM, KRE, and ITB, XHB, those depend on the context. And sooner than later, if you see a drop in yields, it's only going to happen for the wrong reasons. Another dynamic, we see the dollar down, and the respondent here is gold miners going higher a tick. We talked about that in the morning brief. But because of the trade war, we see Chinese equities negative. We see EWW, the Mexico ETF, down big. And today, cryptos are getting hammered. I think a lot of folks just not feeling pretty good about this MicroStrategy manipulation and how it's going to end. So we see a lot of profit taking in cryptos. The other thing is the 100,000 thing never happened, at least for now. So folks are saying, what difference would it make? Let me book at 98 or 95 and get the hell out. Moving on to commodities. Energy down a tick because of the ceasefire news. The dollar did not move much, so we see everything here on its own. Copper, platinum, and metals getting hammered because of the trade war, but gold, silver going higher because the dollar was at least tame today. Grains not going to gain a lot if we have trade fears, but you see some of them, at least rough rice and soybean oil went higher. Although the most impactful corn was down, wheat a tick higher. Then you look at softs, the three Amigos, coffee, OJ, cocoa, no problems here, dollar up, dollar down, trade wars, doesn't matter. Unless you can print more coffee or cocoa or OJ, that's never going to happen, never going to be sold, so we're going to still be in the dynamic where we see supply lacking demand, or lagging demand, I should say. And that's going to keep prices going higher. This dynamic is not going to change. So OJ, coffee, cocoa, this is one of the ideas that you invest in and you go to sleep. Sugar is also becoming less abundant, so sugar is moving higher today. Lumber, same thing. And of course, the party boy, nat gas, the seasonality, up about 1% today. Looking at the options market, the big casino, some observations, we see a tiny bit of reduction in the ratio of calls, meaning booking profits, volume beginning to recede. But the most interesting phenomenon for me is the IV rank. So notice a name like Tesla. It was rocketing higher, the IV rank went closer to 90, 100. Then it came down as the name stalled. Now it's 40%. It could move higher. If it moves higher this time around, the IV rank, it will move higher in favor of the puts because Tesla will be declining and we will see more demand for the puts. The IV rank increases as we see Tesla declining in value. So it could be an opportunity here to buy puts cheap and then sell them expensive. The same thing in MicroStrategy. IV rank was 100 on the way up. Stock comes down, IV rank cools off because we're reducing the value of those calls and puts. But now that we find some footing at, let's say 50s, 60s. The IV rank can expand more, go back to 100, but this time around, because we're seeing demand for the puts, betting the stock is going to go down. So now, if you think MicroStrategy is going down, it is a good opportunity to buy the puts. But when the IV rank was at 100, it didn't make sense. Now we see the IV rank beginning to heat up in names like GameStop as it moves higher, so this could have more upside to come, GameStop. We see the IV rank moving higher in a name like Microsoft on the way up. It's only at 2.25%, so we could see Microsoft gaining more. Same thing in Apple, same thing in NVIDIA. So I think the big caps might catch some relief. Maybe because of the holiday trading week, we see a little bit of a rebound and the IV rank heats up for the favor of calls. But GameStop is another one to keep an eye on. Anyhow, let's move on to the flows, and we see bullish flows for IBIT buying the dip in cryptos, Eli Lilly, E-mini futures, Pinduoduo, T-Mobile, bonds, Micron, Citibank, Taiwan. But we see bearish flows for the IWM, the Qs, Lemonade, AVGO, Home Depot. Obviously, because of the data that we got today, the S&P, Google, CrowdStrike had earnings and went down a tick after the bell. Let's move on to the unusual activities, though, beginning with the bullish ones. And we got Tesla bull call spread here, bullshit call spread, I should say, because they're going way out of the money. They're buying the 1,000 calls. Imagine that. It's insanity. They're just betting that, Elon is now the new president, so somehow Tesla's going to go higher. You wait. The problems for Elon are going to exacerbate. He's not immune from the China trade war. And Trump at some point will have enough off him. He doesn't need him for another re-election. Thank you so much for the money. Now go fuck off. But anyways, here they bought the 450 calls, they sold the 550 ones, all for the expiration date of September 19th, 2025, spending a little over $1.5 million. And then we have IWM, finally somebody buying calls in the IWM. Maybe it's a reversal signal because when they were buying or doing bearish trades on the IWM, it was just going higher. Here we have a bull put spread. So somebody sold the 331 puts, expiration date Jan 17, 2025, and they bought the 229 puts, same expiration date. The idea is IWM by then will be above 231. But if it is below, the stop loss would be the 229, so the loss is limited to $2. All in all, they got a credit of a little over $1.25 million. And then we got ACHR. This is for Archer Aviation. And again, the name rocketed higher, pulled back a little bit today, but folks are betting that we have more gains to come, more squeezing. Low volume could actually support that. So in this case, they bought the 8 calls, the expiration date Jan 17, 2025, spending about a little over $1.5 million. Then we have the last bullish one for you for Pinduoduo for all names. Somebody's buying the dip in Pinduoduo. The 105 calls, the expiration date March 21st, 2025, spending about $2 million. But hold your horses here because we have the opposite trade for JD as we begin talking about the bearish trades. Somebody bought the 33 puts, the expiration date March 21st, 2025. Same expiration date as Pinduoduo. Now I'm suspecting that some pending news that would favor Pinduoduo over JD. Maybe. In this case, they paid about a little over $1 million for those. Another bearish one for you for DIA, the Dow Jones Industrial Average. Somebody bought the 445 puts, the expiration date December 31st, 2024, spending about a little over $20 million on those. I don't know if I want to trade the Dow Jones, to be honest with you. It's a price-weighted index. How can you trade that? But again, it's more in the industrial side, the tariff wars. Maybe this is why somebody probably longed the Dow Jones hedging, although it's a little steep for a hedge to spend over $20 million. It could be somebody betting on the trade war, but I'd rather pick the individual stocks rather than betting against the Dow Jones price-weighted index because you can bet on some of the industrials that are going to go down. But then Microsoft catches a rotation, goes higher, and it keeps the Dow afloat, as we've seen today. What about the ITB? Long puts, this is the Home Construction ETF. We did not get good news today. So they're buying a bunch of puts here, the 111 puts, the 120 puts for the expiration date of Jan 17, 2025. They also bought the 115 puts for December 20, 2024. All in all, spending about a little over $1 million. I think the news is bad and home builders should not be going higher. Even construction should not be going higher. And the last one is Boeing, also impacted by the trade war and the tariffs and all of that. Somebody bought the 140 puts, the expiration date April 17th, 2024, spending a little over $1 million. Whatever rebounds you see in Boeing because of Trump optimism, I think Trump is going to hammer the nail in the coffin on the flying coffin. Let's do the charts and then wrap it up. Beginning with this SPY daily chart, what do we see here? We're trading in the channel, higher lows, higher highs. Can we continue here? We closed above the previous highs. We have a low volume trading couple of days. It might lead us to the upper end of this channel. That's the assumption for now, unless something happens from the wall of worry. You look at the E-mini futures contracting in this rising wedge pattern this time around, so the futures give you a little bit of a different picture than the actual index. This is why I love looking at the futures. We could fail here, folks. You see these ticks higher on low volume. All it takes is one set of bad news and we see selling right away. If we fail at a lower high in the E-mini futures, that's going to be a problem. Now I'm going to begin to think about, hey, let's buy puts for December. We'll look at the Q's daily chart. Above the 20, above the gap, 508.69. So right now, again, a couple of days with low volume. Assumption is higher we go, unless something happens. Then you look at the weekly chart for the NASDAQ futures. We're still in a rising wedge pattern. It could break at any point here. If it happens this week, then we'll probably see more where that came from because this is a week and a couple of days where the market should float higher. There is no resistance at all, but if it goes down, it's going to be a bad outcome. It will be pretty much in the bag. Then we're going to go down and revisit the trend line. The IWM, what do we do here? Got a topping candle yesterday, followed by a decline today, but we did not close below the gap. Yields are still going down. Yes, we added context today, and it's not good for the IWM. It could end up being as the golden arches pattern, as the previous one did, aka the Maverick top. But until proven that way by closing below the gap at least, you got to assume that the risk here in a low volume couple of days of trading should be higher. The dollar pulling back, perhaps reversing and confirming the reversal. And if that is the case, it should be good for gold, but gold appears to be weak here as we see some of the hedges being taken off the market this week. But at the end of the day, the dollar and gold not going to trade together for too long. One of them is lying. And if it is the dollar and it reverses back up, gold is going to flush down. But if the dollar continues to move down, I think that gold is going to recover. It's holding the 100 for now. The MACD on the daily looks as it's trying to recover and move from bearish to bullish. Let's give it the benefit of the doubt. And we can do that via the GDX, which we talked about in the morning brief today. Inverse and shoulder, sure. Momentum in the MACD, perhaps trying to change from bearish to bullish, sure. Can we at least take the 38 calls? Sure. That's what we talked about in the morning. What about the SLV? My preference is the GDX from a trading perspective because it's higher beta, and gold is moving with more predictability than silver. Silver is still flirting with the 100 days moving average, didn't close above it by much, so until I see a significant move here higher in silver where it kind of shows me some energy, I'd rather be in the GDX betting that the dollar is going to go down than the SLV. If that's the bet, if you're betting that the dollar is going to recover, then you probably want to short all of them. What about crude oil? Moving down a little bit, reversal candle that we got off the 100 days moving average. Can we continue to go down with the ceasefire news? That's a possibility that we head down to 66.5. But you got to remember, we have a travel season coming, and we could see the seasonality here playing in crude, and it moves higher. So keep that in mind. Right now, I think it's consolidating. This is good for energy stocks, even though they're down a little bit today if you look at the weekly chart. But again, folks, we're butting heads against the upper Bollinger Bands. Resistance is expected when we look at the weekly chart. So I'm not seeing a reversal here. If we close below 94.21, I'll be nervous. But right now, I think it's just a bullish pullback, and then higher we go. The U.S. 30-year bond yield flirting with the support of 4.44. Didn't break that yet. If it does, for the right reasons or no context at all, at least no negative news, you'll see the XHP recovering. It tried to do that today, but it didn't really reverse because it's not below the 50 days moving average in blue. But if you see yields going down for the wrong reasons or moving back up, it ain't going to be a good scenario for the XHP. So you got two scenarios, moving up or down, that is bad for the XHP. Only one that is positive. And this is why the odds are against you when you at least go with the XHP in bullish bets or you own the XHP. You're better off doing this guy, the IYR, because the IYR has two scenarios where it moves up. If yields go down for the right or the wrong reasons, doesn't matter. In one scenario, when it goes down, if yields are heading higher. So I'd rather be in the IYR. It's above the 50. It's breaking out, looking pretty good today, while the XHP was negative. The KRE risk on regional banks. Reversal candle yesterday, confirmation, not quite. We need to lose 67.79. If we do that, close below, then the regional banks will head higher. There'll be a confirmation, by the way, if you see yields are down, that yes, the regional banks been tracking JP Morgan. They've been going higher along with yields, and they'll go down with it, which, again, doesn't make sense. It should be the opposite. But right now, this is the nature of the robo market. Remember that? Who's trading right now? Nobody. It's the algorithms. And the algorithms are dumb as rocks. Then you look at the Chinese names, BABA, the weekly chart. We need to close above the 100 weeks. Not quite there yet. Let's see if we do it by the end of the week or not. Because if we don't do it, it's going to open the path for more declines to come. Because a lot of other folks will be frustrated now and get out of the trade. Oh, Trump is going to do this. It's been flushing down. I'm about to lose money in the trade. Let me get out. So it's critical for BABA to close above the 100 weeks moving average to maintain any optimism left in the stock. Looking at the VIX daily chart, we went down, closed the gap, retouched 13.88. But look at that MACD indicator. I think it wants to reverse to bullish. But of course, the seasonality takes over, volatility goes down. But I think once we come back, I see the VIX heading higher. It's way too suppressed. It's not going to leave that gap open, folks. It's going to do it. But again, hard to say that that's going to happen in the next 2 days because seasonally, they're good for the market. Bitcoin, Apple. Look, if you got the 230, 235, mission accomplished. We're done with that. It doesn't make sense at all. It is manipulated stock. It should be getting hit hard by China news. But they're manipulating it higher because they can. And because it's easy to do so to keep the index afloat for now. Because if Apple did not participate and went down along with NVIDIA, doesn't matter what Microsoft, Google, Amazon, Meta do. They're too small when you add the weight of Apple and NVIDIA together. But now that we're at the upper Bollinger Bands, if you had the 230, 235 calls, I'd book that right away. I wouldn't short yet. I need to see more weakness before I do that. The souffle Tesla, maybe we see weakness here. Flirting with the formation of a double top at 358.64, and the MACD's rolling over, so is the Vortex, so is the RSI. Confirmation number one, losing and closing below 335.30. Ultimate confirmation, losing and closing below 321.61. So you can trade it if you'd like, but you don't have confirmations yet, but you have the setup for more pulling back to come, maybe all the way to the 20 days moving average. So understand the risk, and if you like it, you want to be ahead of the game with that confirmation, maybe you add some right now in the put spreads that you like to buy, and then average down once you get confirmation. What about NVIDIA? Down today a tick, but I think it's beginning to find a footing. I don't know if we're going to retest the 50 in the next 2 days or not, because it's supposed to retest the 50. After declines like this, you got to recheck with the 50 in blue. But you look at the hourly chart. So we had a bear flag that is now followed by another bear flag. The confirmation is losing 136. But pay attention here. This is a technical lesson for you, because a lot of you look at the candlestick formation, oh, a doji, a dog, a pig, a bear flag, a dick flag, and you make trades based on that. But you gotta combine the candlestick pattern with the momentum indicators. In the first bear flag, look at where the MACD was trading at on the hourly chart. It was declining. So there was a higher possibility that the bear flag is going to play out. Right now, you do have a bear flag, but the momentum is shifting from bearish to bullish. So there is possibility, given the next 2 days will have lower volume and the bias to the upside, that the bear flag is not going to play out. And you see NVIDIA actually rebounding in the next couple of days. Keep that in mind. I'm just saying the possibility. We'll see what happens tomorrow. Bitcoin BTC tulips, what do we see here? Failure after crossing above the wedge pattern. Now we're trading below. Got bearish confirmations in the MACD, the RSI, soon the vortex. I think if folks begin to give up on the 100,000, maybe if we lose 90, we see more of a gamma, inverse gamma to the downside as we see more and more selling. As folks say, okay, 100 not going to happen, let me book it at 90. Which I said that, do that beforehand, do it at 90 like I did. I did it at 89 to be honest with you. But do it 89, 90, it wouldn't matter because they're not going to go all the way to the number that everybody's anticipating to sell at. They're probably going to give you a shakeout operation, get everybody out of the trade, flush it down below 90, and then move higher later at 100,000. Let's move on to the conclusion of this video. What do we have in the economic calendar tomorrow? We got initial jobless claims, a lot of macro, so impact on the dollar bond yields could ruin the holiday optimism. Could. We'll see what happens. Durable goods comes after that, and the advanced trade balance, which of course has the retail and wholesale inventories. But we have the first revision of the GDP. That's going to be important if there was a massive revision, followed by the Chicago Business Barometer. But the most important piece of data is the PCE, the Fed's favorite inflation indicator. If there's an upside surprise, I don't anticipate it, but if there is, it could upset the market. We finish with pending home sales. That's going to be important for the home builders that got hit today. With that, folks, if there is no major action tomorrow, we'll take a break. I'll do some bonus videos for you, and I got some help, by the way, for somebody, my brother, really, my kid brother, to help me out with finishing all of these videos that we've been talking about, because I can't do it on my own, so I got some help, so that should speed up the pace. But if there is no significant activities tomorrow, we'll take a break from the daily show, because, again, I'll be traveling. A lot of you will be traveling, so let's enjoy the holiday. Then we come back. But we'll be active in Discord, though. So we'll do the stream tomorrow with the Top Guns. We'll do the chat in the closing hour for whoever is still with us. And then wrap it up. Okay, let's wrap it up right here now. This is all I got for you, folks. Thank you for listening. Thank you for watching. Appreciate and love all of you. I'll be talking to you again, at least some of you, tomorrow. Happy Thanksgiving. Take care, and good night.
He doesn't want you to look at him. Let's keep dealing the cards.
$40,000.